So now we're going to go into a little bit of monetary history and see how this reflects on what has happened in the past. This will cause shock waves to echo around the world, and it's happening at the same time that we have all of these other deflationary forces happening on us. I was in Sochi, Russia in 2010, speaking at the Sochi, Russia Banking Conference. It's sort of like the economic conference in Davos, Switzerland, but this is for the Russian banking system and Europe. And they all get together and they try and figure out how to deal with all of the new rules and regulations that are being slapped on them all the time. And everybody, the Bank for International Settlements and so on, changing all of the rules. And so I presented a keynote presentation on that there was a massive deflation coming. And I was showing them how their economy was tied toward commodities and oil. That was creating their government income. And so the first chart I want to show you here is the Crb Index. And the Crb Index is a basket of commodities. And what you see here is, it went along, and then starting in 2002, it has this big rise and peaks in '08, and then there's the crisis of '08, and it crashes, comes back up. But what I see here, and what I was showing them in Russia in 2010, was both a dead cat bounce and a head and shoulders pattern. This is the shoulder, head, shoulder. Now this is a pretty big shoulder, and it's a lot more stretched out. I was giving that presentation back here. I thought this was the shoulder. But, and then there's oil. And now I showed them that the Russian economy runs largely on oil. The Russian government runs largely on oil and commodities. They don't have much in the way of an income tax structure, and they don't have much business tax. Almost all of the government revenues in Russia are from exporting commodities. They chop down trees, they dig up stuff like metals, and so mining, and they pump oil out of the ground and they sell it to other economies, and that's where the Russian government gets almost all of their income. And what I was showing them back in 2010 was that the amount of oil that they could pump out of the ground seems to have peaked in about 2004, and they're not able to get any more oil out of the ground, the number of barrels of oil per day. But there's been this enormous price increase that started, back in 2004. There's this big run up, and it peaks in 2008. And then you have a crash again and this dead cat bounce. And so you have a shoulder, a head, and a big shoulder over here, typically with a head and shoulders pattern, and they are a fairly reliable pattern. It's one of the most reliable patterns in charting. But what you do is you draw a line across the neckline. The neckline is these two dips. You draw a line across there, and then you invert the head, and that is the predicted move. So you're talking about oil under $20 was, according to what the chart says. And this is what I was showing them in Russia, showing them that there was a crisis someday in their future that we have. I showed a whole bunch of different commodities, and I showed that there were technical patterns pointing toward deflation, and I have been saying that there would be deflation since I wrote my book and even before I wrote my book. Since 2004 or 5, I was saying that there would be deflation before governments around the world do giant helicopter drops and cause hyperinflation. So this is the impact that it's going to have on the Russian economy and the Russian government revenues. And now at the same time that they're going through this, the Russian ruble, so oil has fallen by half in 6 months. And here is the Russian ruble. So June 26th, it was just a little over 33 Russian rubles. For a dollar would buy 33 Russian rubles. And then about a year later, we're up here at 65. So basically, the Russian ruble has lost 50% against the US dollar. So this is enormous, and it's putting enormous stress on the Russian economy. The number of cars that they sell, for instance, this is the number of vehicles sold in Russia back in the year 2000 to 2007 and 8. They were selling over, this is 1,700,000 vehicles being sold in Russia, and then with the crisis of 08, it dropped to 700,000. So it dropped by more than half. Well, on that ruble chart, if the ruble falls by half, it means that all of the imports double in price. So, and when I was in Moscow, what you notice in St. Petersburg, it was this weird mix of rusted out pieces of junk and old cars and real inexpensive cars, a lot of imports from Korea, China, and Japan, and then a whole bunch of Maserati Quattroports, Bentleys, Rolls Royces, Lamborghinis, Ferraris, more than I have ever seen in my lifetime in one spot. That was St. Petersburg. In Moscow, it was mostly Japanese, Chinese, and Korean cars. Well, all of those car dealers right now are seeing all of the price of when they sell a car, the car they're going to buy to replace that car has more than doubled in price. So they all have to lay off people. The Russian economy is being hit big time, and this is just killing them. What's happened here is because of all of these things, because the prices of imports have doubled, their credit ratings are being downgraded. In December of 2014, S&P downgraded the Russian debt to just above junk bond status. In early January, Fitch did it, and just last week, Moody's downgraded them to one notch above junk bond status. So my predictions for the coming year, I think that the Swiss unpegging against the euro, that shockwave, yes, it's going to resonate around the world, and it may not trigger a crisis in Russia immediately.